Maruti Suzuki is set to take a giant leap into the electric vehicle market. Its aim to become a major player in India's SUV and electric vehicle market. The company has recently announced its plans to spend nearly 1.25 trillion rupees to bolster its capital expenditure between FY24 and FY31. The figure is significantly higher than the company's capex expenditure of 27,538 crore rupees in the last 8 years between FY16 and FY23. Through the investment, the company plans to develop over 10 new models, including 6 electric vehicles. With a focus on developing its SUV segment, the company is hoping to regain its lost market share in the segment, which had peaked at 51% in 2019, but has seen a decline over the years due to fall in the small car sales in recent years. In August, Maruti Suzuki India Limited's or MSIL's chairman R.C. Bhargava had announced that the company is eyeing a good 45,000 crore rupees expenditure to double its production capacity to 40 lakh units annually in the next 8 years. The automaker has also set targets to expand sales channels, building service and spare parts infrastructure, R&D strategies for new vehicles, and most importantly, export capabilities. It is set to allocate nearly 80,000 crore rupees for the endeavor. This massive expansion plan comes on the back of Maruti's acquisition of Suzuki Motor Gujarat's stake from parent Japan-based Suzuki Motor Corporation in July this year. So, what is Maruti up to?
Maruti, as I see it, epitomizes what I would like to call the second mover advantage, or in certain cases, even the third mover advantages. There was a time at the beginning of this century when Maruti waited and waited as others, such as Tata Motors, Mahindra and Mahindra, to an extent even Hyundai, were running away with the diesel powered vehicles market, and Maruti did nothing. The same thing is now happening in SUVs. Some time ago, companies like Renault and Ford came in with affordable mid-size SUVs, and they created a new market segment. Maruti did nothing. It did launch Brezza and S-Cross, which seemed like Maruti was still holding back. That is the lens you have to apply when you look at Maruti's capex figures. Maruti has now announced a slew of electric vehicles launches in the next few years. Maruti is making that investment to safeguard its fortress.
Analysts believe that Maruti has the advantage of an established customer base and a robust service network. This can give it a competitive edge. But how is the company planning to finance its expansion plans? As of August this year, Maruti held a substantial cash reserve of 46,000 crore rupees. It plans to fund its initiatives primarily from its cash reserves and additional cash flows from the new capacities. Maruti Suzuki is also planning to ramp up exports, aiming to strengthen its position in the international markets. In FY23, MSIL's total exports reached 2.6 lakh units, an 8.8% growth year on year.
Typically, if you look at any automotive company, when they are ramping up, right, they have two choices: either to ramp up slowly and wait to get economies of scale and wait until they get the market penetration to enable them to scale, or look at new markets, existing markets where they can increase their presence and use, get to capacities of scale or to use trims or things like that, which makes their overall production cost competitive.
There are potential challenges as well. The transition to electric vehicles, as well as the massive expansion of production and services, may deal a blow to Maruti Suzuki's finances, especially in the evolving automotive sector.
The first number challenge is that would your products and your models be accepted by the consumer, right? And second, if you're across the whole space, will all segments grow at the same pace, or do you have to make an adjustment in your model mix? And the third is that there might be a regulatory challenge coming up in terms of the type of fuel or the type of regulations that will come, whether it's the CAFE standards or whether it is, the safety standards or whatever it is.
Its strategic initiatives in the electric vehicle segment and international export market mark a significant milestone in the Indian automotive industry. Although Maruti Suzuki India Limited has a robust foundation to leverage, the challenges of technology adoption and global competition will test its mettle.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.